Welcome back. I'm Pratap here. Today is 23 January 2025. In this video, I'm going to evaluate the performance of high liquidity zones generated in our yesterday's end of the day report. Even before that, all of you please understand we are providing complete free training on supply demand zone price action. You might be knowing the cost of the training is over 8,000 US dollars. And this is a complete free training. All training videos you can access at our NeoStock YouTube channel. So at our channel homepage, please click on the tab posts. Some of you might be seeing the tab community. So click on the community tab. You get access to this post. This post is having a YouTube playlist link that will take you to all the training lessons. You just click on the link. Now we are into supply demand zone price action course. Now you have access to all the training lessons. You need to start your training from lesson 1.1. So scroll down to the bottom of the page. Here, starting from lesson 1.1, all the training lessons are placed in an order. So please go through all these lessons one by one and strengthen your skills related to supply demand zone price action. I have also provided the link to our Telegram channel in this video description. So please join at our Telegram channel. It will be helpful to you. Each time we release a new YouTube video or any other important updates, we will be providing at our Telegram channel. Now let's get into the analysis discussion. Yesterday, end of the day report, we identified 13 high liquidity zones from daily and 75 minutes time frame. And we got trades from couple of stocks. Especially in Indus Towers, we got 4 trades. 1 is stopped out and 3 are successful trades. And the first one is Nestle. Nestle is a daily high liquidity zone. Here we have a rally candle. This is not a base candle. See here, you add the hidden body. This will be a rally, medium size rally as a leg-in. And all these are 3 medium sized candles as base candles and then a rally candle. This is how our software identified this high liquidity zone. And this one is fine tuned with all the time frames, 75 minutes, 15 minutes and 5 minutes. Actually, yesterday I shown you this stock in our HLQ analysis video. This fine tuned area, yesterday we did not get the trade. And today, today's trading also our software identified the same stock. Actually, day before yesterday identified. Yesterday, the trade did not happen. See, yesterday price did not reach. So, yesterday HLQ zone analysis video, I have shown you. But yesterday, due to lack of time, I didn't explain how exactly I fine-tuned all these zones. But I have shown you this picture. Fine-tuned daily time frame, I shown you this picture. If you would have reference, based on the reference of this yesterday's my HLQ analysis video, if you would have drawn fine-tuned zones here, today you would have got a very good trade. See here, how sharply prices moved. Okay, how I fine-tuned? Go to the 75 minutes time frame. Here you have a 75 minute zone drop, 1, 2, 3, 4 base candles, 3 base candles, medium size leg candle is also part of the base, and a rally candle, drop base rally. This is the 75 minutes fine-tuned zone. Inside 75 minutes time frame, I identified a 15-minute zone. Here you have a drop candle, you have 1, 2, 3 base candles and a rally candle. This is the 15-minute zone. Inside the 15 minutes, fine-tuned with 5 minutes time frame. So this is the 5 minutes time frame. You have a drop, 2 base candles with a small pro-gap rally candle. This is the fine-tuned 5 minute zone. Exactly this is the area we got the trade today. Prices entered and then sharply moved up and finally reached the 15 minutes target. But here definitely you have some concerns here. The reason is this entire candle is, when prices entered here, it is a morning 9:15 candle. Go to the 1 minute time frame, you will get clarity. See this entire price happened in the morning 9:15. The whole movement happened in just 1 minute. Sharply it came down. And the order flow here again pushed the prices. Prices are closed. Those who don't, of course, many of us don't trade in morning 9:15 candle. Or if anybody would have taken somewhere in the middle of 9:15, maybe after 30 seconds, probably price would have reached here. Maybe you would have got a trade. But anyway, we don't have confidence on this morning 9:15 candle. Okay, HLQ zones point of view, perfect. But have you missed the trade? No. You got an opportunity. See here, again prices came, and again they almost near to the zone. Generally what you do, you keep small entry buffer. Even if you would have kept some, because this is a 2,167 rupees stock. Definitely you keep minimum 1 rupee stop buffer before placing the entry. Not even 1 rupee, even 40 paisa buffer if you would have added before this, your trade is executed. You got multiple opportunities. 3 opportunities it gave. This is the first candle, this is the second candle, and this is the third candle, 927. One of these opportunities you would have utilized it, to get the trade. Because it holded the prices. So that's why you should not miss this trade. Missing this trade would have given a big, you might have lost a very big opportunity. So that's why I'm not considering this morning 9:15 candle, because morning 9:15 so many things will happen. Sometimes freak trades also may take place. That possibility is also there. Anything will happen. So that's why we don't believe on the 9:15 price action. But definitely next the prices came very close with small, even very small entry buffer, need not be 0.1%. 0.1% means probably somewhere here the price will come. Let me draw a horizontal line. Need not be, even a small few paisa, like maybe around 40 paisa or 50 paisa is good enough to get all these trades. Okay, after that what happened? Then the rally started. Prices were moving. After achieving 1:5 RR, I sent a message in our Telegram group. What is that I suggested you? Use 5 minutes trailing stop loss. Somewhere here 1:5 is achieved. Now I suggested, because here you have a rally failed ERC candle as a leg-in, you have a base, you have a rally. That is what I suggested. Use a trailing stop loss. In case if any of these 5-minute zone is violated, I want you to book the profit. Why? Because already we got good enough. Anything will happen. Again, institutions make it. I have a fear that whether really it will reach 15 minutes target or not. The reason is huge profit it has given. When I already gave good profit, I think by this time it has given over 6% ROI already achieved by this time when it reached. But still I don't want to exit. Why? There is a possibility it may reach our 15 minutes target zone. If that is the case, see, we will get another 5 to 6% ROI we get. See, from here to here it is 6%, maybe another 5% ROI, 9% ROI we might have achieved. So don't want to miss that. That's why I gave you a suggestion. What is the suggestion I gave you? Use 5 minutes trailing stop loss. Now you should ask a question. Why I didn't give you a suggestion? 1 minute trailing stop loss. If you would have looked into our Telegram channel later, around I think 1 o'clock or 12:30, I gave another suggestion. What is that? For Indus Towers. Indus Towers gave 4 trades. Second trade, I gave you a recommendation. What is the suggestion I gave you? Use 1 minute trailing stop loss. Now immediately you have to ask a question. Why you have given 5 minute stop loss suggestion for Nestle, and why 1 minute trailing stop loss suggestion for Indus Towers? What is the difference? What could be the reason? You should ask this question. See, Indus Towers, we achieved 1:3 minimum RR. Anyway, I will explain the 1 minute, why 1 minute reason I will explain once we reach Indus Towers chart. And here why I gave 5 minutes stop loss. The reason is, see here, first let me show you how much RR we achieved. So approximately I am adding the stop buffer. I think somewhere here I have given the suggestion at this time it has achieved 1:5 RR. That is first point. Already we got a very good RR. Very, very good RR, 1:5. Sufficient profit we got. 6% ROI already we achieved. By this time prices reach. And near to this near to this 1:5 RR, have you noticed a rally base, rally 5 minutes? This is the 5 minute zone. Suppose things went wrong. This 5 minute zone will be violated. Suppose selling pressure is there. Sometimes this 5 minute zone hold the prices and then again it will push. But there is a possibility 1 minute zones will be violated. But 5 minute zone, there are higher chances it will hold. Many times what will happen, 1 minute zones will be violated easily. Just because of its zone violation, if we exit the trade, after that again if it recovered after some time, you will be missing good profits. So the main reason why I have given this 5 minutes suggestion, why I did not give 5 minute suggestion for Indus Towers, that I will explain in Indus Towers chart. You observe here, I have already observed a 5 minute zone very near to after achieving the 1:5 RR. So even if our analysis, even if market goes wrong, if it is violated, whatever the existing already achieved profit, a very small amount you will be losing. Already, still you get a very big profit. Suppose we exited here, how much RR we would have achieved? 1:3.66 RR, at least you would have captured, even if it stopped out. So with this reason, I suggested you go for 5 minutes. And second thing is, violation of the 5 minutes zones is not easier compared to the 1 minute zones. 1 minute zones, a lot of volatility will be there. So there are higher chances prices might be violated. 5 minutes is not easy unless something really happening in the market. 5 minute zone violation means during the intraday. Please remember, these are the intraday related strategies. If you are using short term or swing trades, probably you will be using 15 minutes trailing stop loss or 75 minutes trailing stop loss, depending on MIT or WIT trades. Okay, anyway, here we have 5 minutes. This is not violated. And after that, what happened? Another drop base rally is created. Now, immediately what you do, you adjust your trailing stop. Drop base rally. See, it took support from here. And then finally reached our 15 minutes target. Once it reached the 15 minutes target, definitely you will exit here, because from this zone only huge selling pressure started. Definitely, see, throughout the day it holded the prices within the zone. This zone is not violated. This is the 15 minute zone. Our rally base drop. Okay. And finally, you would have booked your profit at 10 o'clock 55 minutes, 5 minutes candle. And this is the way how much profit Nestle has given. Let me open the Excel sheet. Nestle has given 6,990 rupees profit, which is 9.9% ROI. You may say profit is very less and ROI is more. You see here, Indus Towers 7,000 profit, but ROI is only 4.7%. The reason is here you have around 1.5 lakh or 1,60,000 rupees margin you have to invest here, your investment. But Nestle Industries, your investment is maybe around 78,000. That's it. With the same capital you invested for Indus Towers, you would have got 2 stocks here. You would have purchased 2 lots. If you purchase 2 lots, probably you will get close to 14,000 rupees profit. You will get very close to, like 13,980 rupees profit you would have got, close to 14,000 rupees if you would have purchased 2 lots. But we are calculating for a single lot. So that's why always we have to focus on the ROI. ROI will give you clear picture how much percentage profit we got based on our investment. That is what ROI, return on the investment. So Nestle has given excellent ROI. So this is the way Nestle has given good profit. And after you closed this trade, you would have got a trade in Indus Towers. Continuously 3 trades you would have got. Actually, I missed 1 trade. I will tell you the reasons also, why I ignored it. So next, let's go to the Indus Towers. Indus Towers, I should complete my explanation why 1 minute trailing stop I suggested for Indus Towers. Why I did not suggest 5 minutes trailing stop loss. At our Telegram channel, I have given you this suggestion. Okay, first, what is Indus Towers? This is a 75 minutes high liquidity zone. How we fine-tune this zone? Okay, this 75 minutes high liquidity zone, how our software suggested? We have it suggested as a drop, 3 base candle, medium size leg is also part of the base, total 4 base candles, and then a drop candle. This is how our software suggested this zone as a high liquidity zone. And this one we fine-tuned with 15 minutes time frame. In the 15 minutes time frame, we have a drop, 3 base candles and a drop. And again you have a drop, 2 base candles and a drop. That's it. You have only 2 15 minutes zones here, fine-tuned zones. Drop base drop and again drop base drop. Of course, this is a high explosive legout, high explosive legout. Okay, these 2 15-minute zones fine-tuned with 5 minutes time frame. Here you see you have a rally, 2 base candles and a drop candle, high explosive legout. So this is the 5 minute zone, fine-tuned 5 minute zone, not 5 minute zone. It is fine-tuned. That is very, very important word. Fine-tuned means the zone which is inside the 15 minutes, that 15 minutes again inside the 75 minutes. This is how you should understand. If I did not use the word fine-tuned, if I say 5 minute zone, probably that is not a fine-tuned zone. That is not inside a 15 minute zone. And again here you have one more drop, 2 base candles and a drop and follow through candles. This is another 15. And the one I ignored is, this is the one, drop base drop. This is not a fine-tuned zone. Why it is important? This could be a high liquidity zone. Why? Multiple testing, okay, leave it. Apart from multiple testing, each time when it is tested, you see rally base drop. Again rally base drop. And again here you see a rally candle base and drop near to this. But it is not very clear, but yes. And again you see rally base drop, but this you cannot consider because this is pierced, just pierced. Once it is pierced, it is no more a valid high liquidity zone. This drop base drop is not having importance because it is like a newly created 5 minute zone. Existing high liquidity order flow is gone. Some new order flow will be added, but we never know how strong this new order flow. But earlier we have a guarantee because this is a high liquidity zone. It is not pierced zone earlier. And today it gave first trade here. This is the one I ignored because I realized they continuously prices are moving in this area. Then I realized how I missed this zone in my analysis. Drop base drop. Maybe this is not a fine-tuned zone, I just ignored. Maybe I didn't really focus because I have to analyze 13 stocks I was a bit hurry. But after this price action, I realized why prices are coming down. Then I saw all of a sudden here drop based drop, and again here rally based drop, again here rally based drop. Multiple LOTL zones are getting created here. Multi-testing and multi-LOTL scenarios. That means this is a high liquidity. I thought I missed a good trade here. But again prices reached, then don't want to miss this trade. The moment took the trade, all of a sudden price, it is looking like it is getting violated. And luckily it is within the stop buffer, just 10 paisa above the digital line, and immediately sharply it came down. Then I realized, okay, now it is again moving to its target. Here there is a 15 minutes target is there. Let me show you in the 15 minutes time frame. We have a drop base rally. Okay, anyway, this zone is violated. I am deleting this. But how much loss we got, I already registered. I will explain. But first let me delete this deleted zone so that you will understand. See here, drop, 2 base candles and a rally candle, 15 minutes target. And reached, and again this 15 minute zone pushed the market. Very strongly it pushed because this 15 minute zone is having a fine-tuned 5 minute zone. See inside this 15 minutes. See here. This fine-tuned 5 minute zone pushed the prices until the high liquidity zone again. Now this trade, but this time slightly it pierced because of stop buffer. Our trade is saved, otherwise it would have been a stopped out trade. So luckily the stop buffers, how our stop buffers are saving the trades, you have to understand. Stop buffers are very, very important. That's why every day our high liquidity is, in our HLQs, in our software reports, in everyday software reports, the last 2-3 minutes before closing the video, I am generating stop buffers based on daily ATR. So look into our software reports, everyday reports. Last 2-3 minutes in the video, you will see stop buffers. And again it pushed the prices up to here. And not only that, 1:3 RR also we achieved by the time it reached this 15 minute zone. But at least if you want to take this trade, small entry buffer, maybe some 10 paisa or something entry buffer you have to add here. Otherwise we miss this trade. And here even if you don't add, you would have executed this trade. Even little deep also, your trade would have been executed because the slightly it is pierced the zone after you took the trade. So total 3 successful trades and 1 failed trade. What is the failed trade? The one I removed. This is the one. This one is the failed one. And this is the one I gave you a suggestion after reaching. See here we have 1:3 RR achieved. This is the entry. We have stop buffer and exactly up to here 1:3. The moment it reached 1:3 RR, I suggested you use 1 minute trailing stop loss. Those who are looking for more profits. Because here 15 minutes zone is not very clear, very far away. This is not a 15 minute zone. ERC candle, rally candle, no base candle. Here probably here you have a drop candle, or maybe this is a rally, 3 base candles and rally. Either way we consider. So prices has to reach. Do prices really come up to here? Don't know. Because it has to achieve nearly 8 to 9% ROI to reach this. Achieving this means that much fall should be there. I have a concern. That's why immediately I gave you a suggestion. Use 1 minute trailing stop loss at our Telegram channel. But you should ask a question. Why you did not suggest 5 minutes trailing stop loss? Now let me go to the 5 minutes time frame. Now we are in the 5 minutes only, right? Yeah. See, prices reached here. If I gave you 5 minutes trailing stop loss, where is your 5 minute zone? Here you have a drop, 2 base candles, And again drop candle with hidden body. At the hidden body it is a drop candle. Another drop candle. Another drop candle. You have a 5-minute zone here. Supply zone. Suppose market reversed. It's not suppose, actually it happened. Market reversed instead of further going. Now here your stop loss would have been executed. Where you took your trade here. Where you are exiting almost near your entry only you are exiting. That means what happens to this entire profit? This entire profit is gone. When I should give you 5 minutes trailing, if this 5-minute supply zone is near to the 1:3 RR level, I would have given you that suggestion. But there is no 5 minutes. The 5-minute zone is there, but very far away, and moreover, that is near to the entry where you took. If the stop loss is hit, almost that is same as your entry. Probably you would have collected the taxes, or maybe taxes, maybe some more taxes also you might have lost. The gap is very small. Your entry and the exit, because you won't exit exactly at the digital line, right? You keep some buffer a little above, and if you add that small buffer, maybe that is almost near to your entry point. Moreover, you would have got loss, at least the taxes. Whatever the brokerage charges, security transaction charges, even you would not have got that money. So that is the reason why what I did, instead of giving you the 5 minutes trailing stop loss suggestion, I went to 1 minute. By the time it is reached this, see here in this candle, it achieved 1:5 RR. I thought maybe here we have a failed ERC. This candle I consider, this is the base candle. This is a large candle, drop candle. Maybe looks like failed ERC, still valid leg out. Because a good body is there, sufficient body came out of the zone. This could be your supply zone. Even if you draw week to week, it doesn't make it. Our interest is on this stop loss. Stop loss means your distal line, or a little above distal line you will exit. And here you would have exited. Let me draw a horizontal line here. Here, or maybe if you add some buffer a little above, maybe few paisa, or at this blue color line you would have exited. Still, if you have to exit, there is no other option, because it is violated. And how much opportunity you might have missed from here to this 1:3 RR, a small profit you might have missed. But still, from here to here, this much profit you would have got. Very big profit you would have got. Okay, 1:3 RR, how much profit I calculated, because I am calculating not from my trades or your trades point of view. I am calculating the Excel sheet data is HLQ zone performance. They are not my trades. Please remember, several times I told, old people know, newly joined people who are listening recently, you may not be knowing. You might be thinking all these Excel sheet trades are my trades. No, they are not my trades. These are the opportunities given by the software. Some of these opportunities I might have used, or some of these opportunities I might have missed it. Same is the case with you also. Some of these opportunities you might have captured in your trading, or some you might have missed it. But these are the opportunities our software is giving. Our HLQ zone strategy is giving. So you would have, I calculated up to 1:3 RR. See, Indus Tower achieved the second trade. First trade is stopped out. It has given 1,275 rupees loss, which is 0.8% negative ROI. It is a very small. Okay. Next it has given 4.7, 1:3. And at the blue color line, if you would have exited because your trailing stop loss hit the stop loss, probably in this candle or maybe in this green candle somewhere here, you exited at the near the blue color, a little below or little above, whatever it is. and booked our profit. So at least you would have got some 6,700 rupees or 800 rupees profit. Definitely you would have got some 4.5% ROI or 4.4% ROI you would have achieved. So that is the reason why I suggested you to go for 1 minute trailing stop loss. See, after that what happened? This trailing stop loss. So early stage we exited the trade. We got a very good profit. After that, see what happened? Market was going up. And once again, this entire zone is violated. Which zone? The one we take our trade, the second trade. Let me go to 5 minutes time. Here. This zone is violated here. There are chances that this zone will be violated. The reason is it is already a tested zone. Prices also went deep. So this time, but here, the 5 minutes aggressive trade setup, a high liquidity zone. This is an aggressive trade setup. And this is the one I missed it. But I realized why I missed. After seeing this price action, then I realized here a drop-based drop, and this keep on creating LOTL zones in all these scenarios. And all of a sudden, within few minutes, again prices were started moving up. Then I realized it is giving another trade opportunity. Took the trade, and after that it is distal line is pierced slightly. Then realized this is the end of this high liquidity zone. But still, we are already in the trade. Until the stop loss is hit, we have to maintain the trade. You should not exit the trade. If you exit, see, this opportunity you might have missed. Why we are using stop buffers concept? Because many times stop buffers will save our trades. So it is within the stop buffer, and finally prices came down and once again reached the same 15 minutes target. Totally 2 opportunities it has given from this high liquidity zone. Maybe I utilized one trade opportunity. If anybody would have identified this, maybe you would have got 2 trades today. Then Indus Towers has given 2 trades, 7,225. Of course, I utilized second one. First one I missed it. But our software has given both these opportunities. Because this is, we are evaluating the performance of the software, not about my analysis or your analysis. Or not about my trades or your trades. The opportunities. These are the opportunities our software has given. Have you utilized it or not? That is what we should understand. 2 opportunities it gave. Excellent opportunities. And moreover, all these opportunities has given after you closed the Nestle trade. When you closed Nestle at around 10 o'clock, 55 minutes. And when you got this opportunity, actually price entered multiple times, 10:10, you would not have taken this. Again another opportunity it is given, 10:40, you would not have taken this. Last opportunity it is given at 11 o'clock 10 minutes. You exited at 10:55 or 11 o'clock you might have exited. At 11:10 5 minutes candle, it gave a trade and it gave very good profit. How much profit it has given? 7,055 rupees, which is 4.7% ROI. Actually 4.65, but I am rounding the value, so 4.7. Next time 2 opportunities it has given. And this opportunity you got at 12.25 or even this candle 12.50, and this one at 13.45. And they have given 4.84%, 4.84. So I round out to 4.8. These 2 opportunities. So excellent. So Indus Towers 4 trades, and in that 3 successful trades we got. Hope you got the clarity, the difference why I suggested 5 minutes trailing stop loss for Nestle and why I suggested 1 minute trailing stop loss. So this is the way you have to take quick decisions. Strategy is very important. Strategy only will help us gain better profits. Once we get a profit, you should not simply ideally sit ideal and watching the screen when your profits margins are reducing, because you took the trade. After that, prices are going down, reached the target, you didn't book the profit. Now again prices are going up, and simply if you are seeing the screen without booking the profit, finally sometimes your trade will be stopped out. Instead of getting 7,000 rupees profit, you would have got maybe 1,000 rupees loss. We should not get into that situation. That's why applying trailing stop loss cleverly is very, very important. Do you remember in trailing stop loss I explained Reliance one example. Initially I took a small trailing stop loss, I think 15 minutes. After that from 15 minutes I revised that to 75 minutes time frame. So advanced strategy, mixing from one time frame to another time frame, shifting from one time frame to another time frame. When another time frame, higher time frames zones are created, I was started using higher time frame trailing stop, because lower time frame trailing stop loss, if you are using, they are very sensitive. They react very quickly. Sometimes our zones will be violated, and immediately again market will be moving in our favor by the time you exited the trade. You have to use. So listen that Reliance example, what I explained trailing stop loss, how we would have captured a huge money from Reliance by using that concept, I explained. So this is about Indus Towers. Few stocks came very close, narrowly we missed. That also I will explain. And a few trades are stopped out. The zones are violated, not stopped out. Zones are violated, and we predicted those zones will violate, because lesson 16 you learned when a zone will be violated. And there is one or two stocks we expected the zone will be violated. It didn't happen. That's a surprise. Rare situations it will happen. We will see all those examples. So next one is Pidilite Industries. This is a daily high liquidity zone. Yesterday I told you this. This zone is not having any fine-tuned zone except a 5 minutes horizon. Here we have a 5 minutes horizon. Yesterday also we got this stock. Yesterday live market. That is yesterday HLQ analysis video I explained. We have a 5 minute zone. We have a medium size candle rally, 2 base candles, and a rally candle even with hidden body, pro gap. And this is the horizon for this entire daily high liquidity zone. It picked up the orders from this horizon. See, entire leg out. After that prices came into the zone, further moved up. And you may ask a question, why we didn't have 75 minute zone? Look into the zone, you will understand. There is no proper 75 minute structure here. See, let us assume this entire candle is rally, then all these 4 candles, base candles, then again a rally. That means our 75 minute zone, daily zone are same. Now go to the 15 minutes time frame. Let us assume 75 and daily are same. Now in the 15 minutes the structure is not good. See all these candles, the structure is not at all a convincing structure. All 1, 2, 3, 4, 5, 6, 7, 8, maybe a medium size, 9, 10, 11, 12, 13, so many candles. When you have such kind of structure, and moreover it picked up the orders from this 5 minutes horizon to this entire daily high liquidity zone. So that's why, so I don't have any interest to draw the zones in these areas. Okay, next one is a Birla Soft. This is a daily high liquidity zone. See, Birla Soft also we don't have any proper structure, but here something I have drawn 75 minutes horizon to this entire daily zone. See, near the horizon prices came and sharply moved, and actually even after adding entry buffer 0.1% with some 40 paisa or 50 paisa difference, we missed the trade. Otherwise it could have been a good trade. Okay, go to the 75 minutes time frame. Here the structure is not at all good. See here, you have a rally candle, you have drop, 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 no base at all. You have a rally base, rally is there, but we want rally base drop or drop base drop. Nothing is there, no supply zone at all. That's why see today, easily prices moved up, moved up, moved up. But here you have a rally base drop is there. In the recent price action, it's not rally, sorry, it is a drop. Failed ERC candle drop. Failed ERC, you have to look into the dynamic view. It is a drop base drop. This 75 minute zone is not having proper 15 minute structure. That's why I didn't fine tune. Go to the 15 minutes time frame. See, all these candles. You have a drop, 1, 2, 3, 4, 5, 6, 7, 8, 9 base candles drop. That's why easily violated today. Prices went. Here, first of all, let me go back to the 75 minutes. This daily zone, see this entire thing is daily zone. This daily zone is having a horizon, 75 minutes horizon. You have a rally, 2 base candles and a drop candle. This entire 75 minute zone is the horizon to this daily zone. But this horizon you need to fine tune with until 5 minutes time frame. So that's why what I did, I went to the 15 minutes time frame. In the 15 minutes time frame, I have a rally candle, base candle, medium size leg candle, and then a drop and follow through candles. Excellent 15 minute zone. This 15 minute zone again I fine tuned with 5 minutes time frame. This is the real institutional order flow. You have a drop, 2 base candles and a drop and follow through candles. So many follow through candles. So that's why this is the area we want to plan our trade. But today what happened? Prices came very close to the fine-tuned 5 minutes area. It entered into the 75 minutes horizon. See this black color line what you are seeing, that is the horizon of the proximal line of the 75 minutes horizon. It entered into the 75 minutes horizon. But it is not good enough to enter close to the fine-tuned 5 minute zone. Even if you add your entry buffer comes somewhere here, like this. Narrowly we missed the trade. Otherwise, it would have given a very good profit today. It achieved the 15 minutes. See here, we have a rally, base rally. It achieved this. You may ask, can't we draw here? All these are all not clear. 1, 2, 3, 4, 5, 6, 7 candles. Easily it will be gone. And this leg out is also good. This structure, see, easily it will violate. That is what happened. And reached this target. You would have got a good profit today. Sorry, here. Rally, 2 base candles and rally. But narrowly we missed. So fine, that's okay. Next one is a KEI. This is also daily high liquidity zone, supply zone. See, fine-tuned zone is violated, right? Actually, we didn't consider our trade in this zone because it is already tested fine-tuned 5 minute zone. Go to the 75 minutes time frame. Here actually 75 minute structure is not good. Just like compromised and drawn the zone. This is a leg in, 3 base candles. Leg out is okay because hidden body you have a drop candle. Within the 75 minutes, we have a 15 minute zone. See, rally base drop. And this rally base drop again fine tuned with 5 minutes time frame. Let me hide this large candle, then only you get clarity on the structures. Now you see, you have a rally, you have 1, 2, 3 base candles and a drop candle. And prices entered and touched the zone, even type 2 also just touched and then came down. When you have short projection, sometimes we will feel we can take second entry. If anybody planned second entry, it would have been, your trade would have been stopped out. But zone's point of view, it is already tested once. Taking second trade in the same zone, quite risky. Sometimes it will work actually, because such kind of rejections are there. Sometimes when you plan second trade on the zone, it will work. But this time it didn't. Easily violated today. Easily passed. Very, very easily. Morning, look into the 1 minute candle. So this is morning 9:17 candle. Maybe, see, it has given some small rejection from the zone, but not having enough power to push. Maybe demand is also strong, and finally entire thing is gone. But anyway, it is a tested zone. And the next one is Marico, we didn't get the trade fine-tuned zone. I think Marico earlier I explained. Previously I have explained how I fine-tuned. We have a fine-tuned 5 minute zone. Today prices did not enter. Next one is MGL. MGL also we discussed previously. Drop base drop. We have a fine-tuned zone in the recent time. See, this entire thing is 75 minute zone. We have a 75 minute zone here. Well, and within this 75 area, we have a recently newly created 15 minute zone. Rally base drop is a failed ERC candle, and within this 15 minutes we have a fine-tuned 5 minute zone. I think I explained recently this, how I fine-tuned. We have a drop candle, failed ERC, drop, base drop. Prices came very close today at the closing hour of the market, almost closing hour. But anyway, market is over. And you can't trade tomorrow on this, because HLQ zones are valid only the next trading session. Only HLQ zones. Bullish and bearish trade setup you can trade. Even after 1 week also, if the trend is maintained, you can take the trade. But HLQ zone strategy is a special strategy. I explained lesson 21.3 video. Next one is Adani. This is the one I surprised. Why? This is a 75 minute zone. See, price sharply came down. Okay, anyway, this is a rally, 2 base candles and a drop candle. And another next candle, another big candle. Go to the 15 minutes. We have a 15 minute zone here. See, failed ERC as a rally candle, dynamic view. We have 1, 2, 3, 4 base candles and a drop candle. Today prices entered into the zone and came down. But did I fine-tune this zone 5 minutes? No. That means 5 minute structure is not good. Look into the 5 minute structure. All base candles. You have a rally candle 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Drop candle. This leg out is also not really great leg out. But still, if you consider. So that's why such kind of zones should be violated easily, but didn't happen. Rarely we see such kind of situation. Maybe 1 minute level or any zones created here? No. Okay, anyway, we didn't plan a trade in this, and whatever the profit it is given, we should not consider, because remember, If there is no fine-tuned zone, you should not consider at all. It is a profit. Either aggressive trade setup should be there, or a fine-tuned 5-minute zone should be there. Otherwise, those trades are not valid. Even they are successful, they are not valid. So that's why Adani is not a valid trade for us. And Indus Towers we already discussed. And next one is the KPI Technologies. This is also a 75-minute zone. See, this is also violated. Drop, base, drop. I have drawn 15-minute zone, but I did not drop 5-minute zone within this 15 minutes. Why? What is the reason? Let's look into the 15 minutes time frame. We have a rally candle, base candle. Actually, this is also a medium size. Okay, I considered medium also part of the base, and drop candle. Actually, it is a big candle only, but okay, medium size, okay. So that way I consider this 15 minutes zone. And within this 15 minutes, look into the 5-minute structure. We have a drop candle, you have another drop candle, you have another drop candle. Where are the base candles in between? No base candles. Such kind of zones will be violated easily. That is what happened today. The entire zone easily violated. Next one is LIC. LIC has also 75 minutes high liquidity zone. Actually, this LIC is high liquidity zone is inside daily high liquidity zone. This daily zone I drawn previously is a high liquidity zone. It is already there in my chart. Our software earlier it has given rally, base, rally. This was the daily high liquidity zone. So inside the daily high liquidity zone, a 75-minute zone is created. Sometimes it will work. Previously also once it happened, it gave a good trade, the supply zone. But today, we didn't fine tune the zone because the structure is not good. We know this 75-minute zone will be violated. However, software identified drop, base, drop. But 15-minute structure is not good. Look into the 15-minute structure. All these are all medium-sized candles or base candles. We have if you consider this as a rally, you have a drop, base 2, base 3, base 4, base 5, medium-sized candles. We don't have any proper structure within the zone. We know such kind of structures will easily violate. That is what happened. See, easily gone, entire. In 9:30 candle, entire 9:30, 15 minutes candle, it is gone. So this is the power of lesson 16, because lesson 16 only you learned the concept. The second video in lesson 16 you learned when a zone will be violated. 80% scenarios we can predict. Next one is a Tata Communication. This is also a 75 minutes high liquidity zone. This is also not, of course today prices did not enter inside this area. See, I fine-tuned with 15 minutes, not with 5 minutes. Why? Let's look into this. See, here we have okay, I consider this candle as a rally candle, failed ERC, 1, 2, 3, 4 base candles and a drop candle. That way I have drawn this zone. But it doesn't have proper 5-minute structure. See all these candles, the 5-minute structure, all these base candles, so many base candles. You have a drop and all these base candles. You have lagged follow-through candles. Such kind of zones should be violated. See, but here prices entered did not violate. But anyway, there could be other reasons behind that. But according to our strategy, we don't trade in such kind of zones. Tata Communication. Next one is Yes Bank. This is also a 75 minutes high liquidity supply zone. Yes Bank is also same is the case. Actually, prices entered and came down. Go to the 15 minutes time frame. Here also I consider this as a rally candle, failed ERC as a leg-in, 1, 2, 3, 4 base candles and a drop candle. See, prices entered and came down. Previously also prices went and came down. But I can't take trade when there is no proper 5-minute structure. Go to the 5 minutes time frame. The structure is not really a good structure here. Maybe rally candle, 1, 2, 3, 4, 5 base candles. But this is not a good leg out candle. This is a medium size candle, medium size candle, medium size candle. Maybe you may say imbalance started from here continuously in all these candles, but we can't take a risk in the 5 minutes level. 5 minutes level compromising the zone and the drawing is not really advisable. So that is the reason why anyway not having. Moreover, prices also earlier came out from this zone and structure is also not good. When you have such kind of structures, ignore them. Even if they gave you a trade, still you need not worry about that. We need a proper fine-tuned 5-minute zone. That's it. So these are the high liquidity zones. Hope this information will be useful to you. Let's all meet again in our next video. Thank you.